So honestly, like many places, the housing market is down a little bit, down anywhere from 5 to 10% this year. So the inventory is going up. There's a lot less demand since rates are up. So as you know better than anyone else, there's a lot less buyers, so a lot less demand.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jason Lee is a commercial real estate broker and investor based in San Diego County, California. Jason, welcome to the show.
Hey, Sam. Thanks for having me.
Hey, man, the pleasure's mine. Jason, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah. So I guess I was a lost college kid at San Diego State University. I was kind of trying to network and meet people and see what I want to do with my life. Fell into real estate because a lot of my friends on my network, I saw their parents were doing extremely successful in real estate, and I joined the real estate club on campus. Met my old mentor, and he kind of taught me the whole business, how to be a multifamily broker in San Diego. Fast forward 5 years, I now own my own brokerage here in San Diego, California, called JLM Real Estate. We have a team of about 8 agents and brokers and marketing people. And yeah, that's where I'm today. And then on the investment side, I own and operate 80 units here in San Diego County that I own 50% with my partner. So yeah, that's a quick 90-second tidbit.
Man, that's awesome. I mean, that's a good fast 5 years to grow, that quickly. Did you finish college, or did you finally just get the bug for real estate and say, that's what I'm doing?
I did, yeah. But I got my license the middle of my junior year, and then just took night classes and worked every single day from junior to senior year, since, as you know, real estate's a commission-only job. So I had to get some nest egg in my bank before graduating. So I did finish college, but I did some deals before graduating so I could actually support myself in case, I didn't do any more deals for a while.
Man, that's really cool. I love that. So when you stepped out of college, diploma in hand, what was your next move?
Diploma in hand, I honestly just wanted to keep doing what I'm doing, but really, put gasoline on the fire and spend more time doing it. So, before, since I had school, I couldn't be there full time, but my plan after I graduated was just to go all in on real estate and, spend at least 50, 60 hours a week, hitting the phones, trying to find sellers, trying to find buyers.
What were you looking for initially? If you're looking for sellers and looking for buyers, what were you looking for initially? When you first got out of school, what was the asset class? Yeah.
So, I was really lucky. I actually, the mentor I met my junior year was in multifamily real estate down here. So, I started interning there my junior year, and I stuck with that asset class throughout my whole career. And it's, been really great because it performed well throughout COVID, and there's been a lot of demand, very steady demand. So yeah, I'm really glad I fell into the asset class and stuck with it after school.
And that's something we've talked about a few times here on the show, is especially in your market, because you're specifically focused there in San Diego, right?
Correct. Yeah.
So in your market, there's not a lot of new supply. And then correct me if I'm wrong on this, because I don't invest in your market, but there's not a lot of new supply coming into your market. So for you guys kind of have a constrained supply and an almost unlimited demand, it seems. So how are you guys working in those constraints?
Yeah. I mean, the last few years, if you were a buyer, it was extremely hard. If you were a seller, it was extremely easy. Rents have skyrocketed because I feel like COVID accelerated the growth of San Diego, because people have seen the outdoor life here, how much there is to do, the nightlife. There's just, the weather's, absolutely perfect. So I feel like a lot of people, there's a huge migration from San Francisco, Los Angeles, other big cities to San Diego to live in a more, calm beach town that's not as crazy, not as much traffic. So that has caused the rents to spike up a lot in the last 2-3 years. I mean, rents were going up, almost 20% a year for the last since 2020. So it's been crazy, but it's finally slowing down. It's kind of stabilizing now. But if you were a buyer, it was extremely hard to find a deal unless you knew a broker, had the relationships, had a good network down here. If you were coming out of state to invest in San Diego and you wanted to look on the market, there were no good deals. So it's extremely competitive.
So how have you gone about finding deals that pencil there in San Diego for your own portfolio?
Yeah, I mean, number one reason is I'd say my relationships. I have a lot of good relationships in San Diego. So that's been a huge factor in, talking to people, seeing what's out there, what sellers are talking to. And then also, since I own a brokerage and I'm on the phones, my guys are on the phones a lot. We find a lot of sellers who are looking to sell at their price. And if the price makes sense for me or people that I'm working with, then a deal can happen. But a lot of the times, like 90% of the time, the prices are, way too high. So it is pretty rare to find a good deal here.
I know you can't tell your buyers this, but do you see your buyers acquiring things that you just go, gosh, I wouldn't buy that it just doesn't make sense.
I'll honestly advise my buyers against a bad deal if it's really bad. Like if I know they're not going to make any money on it, I'd rather broker them a good deal and have them not be mad at me in 5 years. So I will give them that advice. But if it makes sense for what they're looking for, like sometimes an investor who has a lot of money doesn't really need cash flow and is looking for an equity play in a really good location by the beach, and they put enough down they can pay the mortgage off and it'll appreciate slowly, but or fast even. But I would say that none of my buyers have bought deals that have lost them money in the past.
Right. No. And again, I wouldn't suggest that you would put somebody in that position. I guess I see some things even coming across the channels in the asset class that we're buying in, and I see the deals getting taken down. I just go, I don't understand how that even happens. So I just wondered, from a broker's perspective, if that happens too, where you go, hey man, knock yourself out. I don't see the value there, but maybe you do. And that's I guess that's the beauty of the absolute real estate game, is that everybody gets to make their own decisions and play the in the big leagues.
Exactly. Yeah, you couldn't have said it better. I feel like everyone's goals are different. Like for you, I'm sure you're in growth mode and I'm in growth mode. But if someone's just looking to park cash and put in a safe investment, then those people can pay a lot more for properties.
Yeah, absolutely, absolutely. Tell me about growing a brokerage. I mean, it's kind of it's a business all on its own, independent of real estate. Now you're hiring people. Now you're in the transaction side, not necessarily in the ownership side. Why did you decide to open your own brokerage? And then what have been some challenges that you've faced as you've opened that and grown your team?
Yeah, honestly, to be completely honest with you, the number one reason why I branched out on my own and wanted to start my own thing is because I was butting heads and, stepping on a lot of toes at my old brokerage because there was a lot of brokers there doing the same thing. So San Diego isn't a huge market, so we're kind of all talking to the same people, and there's a lot of drama between brokers there. But the second reason why was because I wanted to start my own brand. I've always wanted to own my own company and create a great company culture that that I could make and help younger guys do the same thing I did at a quick pace and teach them the system. So I think I get a lot of fulfillment now out of training, coaching, and helping my guys be successful in real estate. So overall, it's been a much better experience than just being a single agent.
Yeah. How do you attract new talent to the team for a brokerage team?
Yeah, so that's a great question. Honestly, being consistent on posting on social media platforms, especially LinkedIn, Instagram, Facebook's been okay, but LinkedIn and Instagram were the main ones for me that kind of got me a lot of brand awareness because they saw that I was doing deals, I was posting educational content. Other than that, though, in the beginning, I just hired from my immediate network. I just asked my friends if, or older people in the business, if they knew anyone that's younger looking to get in the game that wanted to get coaching. So word of mouth and social media was the number one way I attracted new talent so far.
And when you brought a new broker on, especially let's rewind to the first new hire, because I think a lot of people, when they're scaling their company or scaling their portfolios, bringing on that first new hire is a big deal. They're going, okay, this new person's coming on. Now I'm responsible not only for making sure that they have enough to do, but they have the framework in which to do it. How did you tackle those two challenges?
Yeah, that's a great question. I mean, I think everyone has that fear that when you hire your first person, you got to make everything be perfect and you got to make sure all the framework's great, or else, they're not going to like you. They're going to leave, whatever it is, all the fears in your head about that. But I think the number one thing for me is I knew I was going to make mistakes, but I knew that I was going to spend a lot of time to make him better. So I think just having that mindset of, answering all the questions he wanted, doing training at least 2-3 times a week to make sure that they felt like I was actually engaged and trying to help them. Because I know a lot of brokers that are, that are older in the business that kind of just tell their younger new agents to go hit the phones and good luck. If you find a lead, I'll give you time. But other than that, they don't do anything else. So I think being really hands-on and actually spending time to show them that how important they are to the company was the number one thing.
And that's really cool. Yeah, and that's exactly it. Certainly I've seen enough of that myself where it's like, hey, go hit the phones, call me, if you ever find anything. And then it's like you just watch people just wither on the vine. It's like, okay. Well, that was a fun experiment. So talk to me about this, the multifamily market there in San Diego. I know you mentioned that it's a small market. It seems like everybody already knows each other. Give me the health of the market. Give me some challenges you guys are facing currently, and then talk about maybe some opportunities.
Yeah. So honestly, like many places, the housing market is down a little bit. It's down anywhere from 5 to 10% this year. So the inventory is going up. There's a lot less demand since rates are up. So as you know better than anyone else, there's a lot less buyers. So a lot less demand. For multifamily, it's been actually pretty steady. Values have still steadily gone up a little bit, not nearly as much as the last 2 years, but it's been actually very steady. There's just not a lot of sellers in multifamily here. So there's not a lot of inventory. There's a lot of capital looking to place money. But that being said, though, this year, I probably have the fewest buyers that I'm working with in the market. So I definitely think there is an opportunity for someone who's looking to jump into small or medium-sized multifamily, maybe buy their first property. There's a lot of opportunity for that because there's a lot of mom and pop sellers here that own like fourplexes up to like 20 units. So sometimes, those people are a lot more motivated than the bigger institutions that have unlimited money. So yeah, that's where I see the opportunity for sure. And when there's a slowdown, there's less buyers. Less buyers means less competition. So
when you say you have fewer buyers, what have been some of the reasons that people have been given? Maybe they're past clients of yours and they say, hey, you know what? We've taken a pause on acquisitions right now. What have been some of the reasons that you've heard?
Yeah, that's a great question. I think the biggest rebuttal I've heard on why they're kind of sitting tight or waiting to see what happens. Number one answer is because the debt market is so, unstable. People don't know where rates are going, so they want to see where things stabilize. Number two reason has been people think that the prices are too high now. They want to wait for prices to come down. That's been a big answer. A lot of my clients who bought in this uptick are now kind of priced out of the market. They want to wait to see what happens to see if prices come down. But yeah, I think those have been the honestly 90% of the answers on why people have taken a step back.
Do you, and again, this is purely subjective, but in your estimation, are those unfounded fears? And does that create opportunity for the people that are still in the game? Or do you see some merit to what it is that you're being told?
I mean, that's a great, honestly, my honest answer to that is I haven't seen their fears unfold. I haven't seen the price drop they're asking for. I feel like people in San Diego have been saying for the last 5 years that they're waiting for prices to come down and they just won't. Multifamily is literally the most recession resistant asset class besides maybe like self-storage, mobile home parks in real estate. So it's really tough in a market where there's no supply for apartments for prices to come down. So I think there's a deal in every single market. So I think, as you said, it creates opportunity for the ones that are still staying in the game. They're looking in all markets. The best investors I work with, the most wealthiest investors, always tell me there's a deal to be had in every market. You just got to be creative and you got to be talking to people. So
that's it, man. You guys have a perfect storm of a lot of things that maybe other sections of the country don't have. One, like you said, you have constrained supply. Couple that with, of course, our massive money printing. So I think people are sitting on their thumbs going, yeah, we're going to wait around for prices to come down. It's like, come down from what? We've tripled our money supply or something close to that in the last 3 or 4 years. It's like, where the price is going to go, but up. And even if they stabilize, it's still, I don't see that coming down. So you guys have constrained supply, enormous demand, and of course, whatever it is that we've done to our money supply is just, who knows where this winds up, but it's nowhere good. I can't imagine. So I think that's a really good point where you said that the people that you've seen, in the game a long time and some of your wealthiest investors just keep saying there's a deal to be had in every market. So we've talked a little bit maybe about some of the risks that some of your investors are seeing. What are some of the opportunities, I guess, that you see on the horizon right now?
I think opportunities for anywhere in the U.S. I think is I think there's going to be less demand than there were in the last couple of years. So I think if you're looking anywhere, for real estate, I think there's going to be less competition, which means you have a higher chance of getting a good deal. I think there's a lot of opportunity always in off-market properties, but I think if you are an investor or a passive investor and you know people that find off-market deals, that's gonna be your biggest value add for you at this time, in my opinion. But San Diego specific or Southern California specific, I think accessory dwelling units or ADUs are a huge opportunity where you can convert garages into existing units, which I'm doing right now, and also building ground up very easily because there's a housing crisis down here. So the government laws to build here have been very lenient lately.
Really? That's that. I want to talk more about that on the ground up side of things, because everything I know about California tells me that it's very restrictive and very difficult to get anything through the planning and development commissions and whoever other boards you got to get through. So you're telling me right now there's opportunity to build in Southern California.
Yeah, but not in all situations. So like if you're building a big multifamily complex, what you're saying is 100% right. It's going to be extremely challenging, a huge headache to get that approved and planned and get permits. But if you have like a fourplex or duplex, a smaller multifamily, and you have like a big backyard of wasted space and you want to add an ADU, I mean, those can get permitted and passed by the city within 5 to 6 months compared to 2 to 3 years for bigger projects. So if you have some smaller properties you want to add units to, or convert a garage, the process has actually been very quick for the ADU laws.
Wow, that's really, really cool. So tell me about a project you're working on right now where you're able to do that.
Yeah, so one I just finished was a duplex I bought for $650 down here in San Diego. It had two car garage in the back and a single car garage in the front, and they were both freestanding garages. And basically what I did was I remodeled the front house, remodeled the back house, and then I got plans and permits to convert the back garage into a 2-bedroom, 1-bath unit and the front garage into a legal 1-bedroom, 1-bath. Overall, to convert those garages, it cost me about $250,000. The house and the studio costed me like $125 because there was major foundation issues. So I was all into the project after carrying costs for about $400,000 plus $650 of $1,050,000, and the property appraised for $2.1 million. So that was just a way that I had a huge upside on one of my properties from turning a duplex into a fourplex.
Right. No, that's absolutely awesome. And what's the long-term plan with that? Do you hang on to those? What's your strategy there for those properties?
Yeah, so that one's kind of the exception to the rule. Usually I'll sell it and do a 1031 exchange into a bigger asset. But that one, since it's a cash cow, I'm just going to refinance it into an interest-only loan, which I did, and then just hold it. But other than that, my plan has been to sell the smaller ones and buy the bigger buildings and do the same thing.
Man, that's really, really cool. So tell me about the 80 unit, I guess, portfolio that you've developed. Has that been mostly smaller, 2 and 4-plex properties, or has that been some larger multifamily? How have you built your own personal portfolio?
Yeah, I mean, like you said, it honestly started that way. My partner and I started buying a lot of duplexes and fourplexes, and then we bought them for a pretty good deal, and we'd fix them up, re-rent them, and get a huge premium on it, and then we'd sell it and do a tax-deferred 1031 into like an 8-unit or a 16-unit building. So now our properties are more comprised of 8 units and above, but it definitely started that way. Start from the smaller stuff.
Right, man. That's really, really cool. Jason, I got this question for you. Let's rewind. I mean, you've had great success over, a very short period. In 5 years, you built a brokerage, you've acquired 80 plus units, you've done all sorts of things from 1031s to converting properties, into the ADUs and finding value on that front. If you could rewind the tape 5 years, what is one thing you would maybe do differently if you could?
Oh, that's a great question. One thing I would definitely do differently is vet my contractors more. I got hit pretty hard with an unlicensed contractor. I didn't vet that much. It was actually a referral from a client, but it was one of my first remodels, and my client referred him to me. Didn't have his license. Seemed like kind of a sketchy guy, but I had no idea on how to vet contractors back then. I just kind of learned the hardest way you could. He basically on my fourplex did about 10 to 15 grand worth of work. Kind of covered some stuff up, didn't understand how much progress he made because I was so new to it. And he ended up taking about $80,000 from me and just taking off and running away. So that's one thing I would do different, is learn about properties and construction much more before getting into rehabs.
Whoa, 80 grand. That is not an inexpensive lesson early on in your real estate career. What gave you the courage to stick with it?
I take every failure as a learning lesson. So I just took that as like the biggest learning lesson of my life and just learned everything I could about remodels, about, how much a roof costs, how much a kitchen costs, a bathroom, flooring, baseboards, windows, et cetera, all that stuff. And now I know to vet every single person and have everything in writing. So I think just believing in real estate and understanding that it was just a mistake on my part and that I'm extremely bullish on the asset and not blaming anyone but myself was how I got over that, big hump.
Man, that's those are tough words for a culture that is not anymore. I feel like willing to take personal responsibility. Where it's like, hey, the fault was my own. Outside of getting everything in writing, what else are you doing to vet your contractors before they come out and do, I guess, $80,000 in work?
Oh yeah, so I think I have a good team now, but when I was asking everyone questions about how to vet the right contractor, I think the number one red flag is if they're not busy. Like if you call a contractor for the first time, they say they can come out tomorrow and start, that person probably isn't the best because they're not busy. The people who are busy are the ones who are the best ones. And now I try to get at least 3 or 4 referrals from people who have worked with them. So one referral isn't enough for me anymore. Can't trust all of them. So I think those 2 ways is how I vetted them correctly.
Yeah, absolutely. And depending on the size of the project, I mean, if it's a 250 unit multi-family project, that's going to take a different team of contractors maybe than a duplex might require. But something I've used here recently has been actually next door. So I have a project, actually the office I'm standing in here. I needed a good electrician, had one, but then they were unavailable. And so it actually got on next door. I don't know if you've used that or not, but man, the referrals that come, and again, you get like 4 or 5 people saying, yeah, use this company. And we picked up some amazing contractors that way. So just food for thought, for those of you who are listening, that may be a way on a smaller project, such as what I'm standing in right now, where you can find some decent contractors. So that's really cool. So that's something you would do differently. If you go back 5 years, what is something you feel like you've done really right that other people should emulate?
I think something I've done right is just stay ultra focused on the goal and just believe in the process. I think real estate's one of the hardest things to stay focused and believe in yourself, because the first 2 years are probably the toughest 2 years of your life, because if you don't know anyone and you don't know much about the game and it takes a while to get that learning curve going, it can feel really daunting and really, scary up front. So I think having that belief in myself and knowing that I can make it and seeing that other people have done it before me has been the number one most important thing for my success. And honestly, working long hours, I think if I didn't work the hours I did, I wouldn't have gotten ahead of my competition. So ultra focus and long hours has been the number one thing for me.
Man, I love it. I love it. Let's assume I called you today and I said, Jason, hey, my name is Sam. I am super interested in buying multifamily properties in San Diego. What would you tell me?
I would ask you some questions about your goals and see what you're looking for and what would kind of fit your needs, your criteria. And then for the benefit side, I would tell you that, you're looking in a supply constrained market where rents are steadily going up. In 2008 to 2010, the rents here actually went up about 2%. So even in the worst of times, if your property's cash flow on day one, you can pay your mortgage. It's going to be very hard to lose here. The only way you can lose in San Diego is if you're over leveraged and, you can't pay the bank. So, location's great.
Man, that's awesome. Certainly appreciate it. Jason, thank you for taking the time to come on the show today. If our listeners want to get in touch with you and learn more about you and the market that you're involved in there in San Diego County and maybe even buying multifamily property there, what is the best way to do that? Yeah,
I appreciate you having me on, Sam. You're a great host. Thanks for having me on. And the easiest way to find me that you can connect with me is either sending me a direct message on LinkedIn or Instagram. LinkedIn's just my full name, Jason Lee. And then my Instagram handle is Jason Joseph Lee, which is my full name. But those are the easiest ways to find me.
Fantastic. Jason, thank you for your time today. Certainly appreciate it.